Hey, it's Michael Saul, also known as Tiny, with the market video for the week of April 15th, 2013. Before I start, just want to say this is going to be the last 2 weeks of the newsletter being free. So check it out. If you have not checked out the newsletter, we've had it for free for a couple of months. Sorry about that. And you can still check it out for the next couple of weeks, but we are launching this as a paid service on May 1st. Early adopters, that means the people now that know about it, are going to be able to get the newsletter for only $37 a month. We're going to be launching the newsletter for $4.97 a year in about a month, maybe June 1st or July 1st. We're not quite sure, but for now, we're offering it for $37 a month, no long-term commitment, cancel anytime, etc., etc. And if you haven't checked it out yet, you should. And we're going to be adding some new things in for the next couple of weeks. And you will find it to be an outstanding value for just about $1. I don't know what that is. What is that? $1.25 a day. If you're using 30 days, but I guess you have to use 20 days, so then it's $1.50. I don't know, whatever it is, but it's a very economical investment, and no matter what type of trader you are, it will assist you in making better decisions. We're also going to be launching the live chat room, and that's going to be $67 a month, and that will include the newsletter. So only an extra $30 a month to have Danny and myself in the live chat room. And we're going to try to get Paul in there once in a while as well. And we will be, once we go pay, we will be focusing on stocks as well as the index futures. So if you haven't tried out the chat room, check it out. And if you have, we not only do we provide great information there, but we also, like to keep it light. We like to talk off topic if the market's not doing anything. We're not really sitting there just staring. And people are allowed to talk, obviously ask questions. We don't restrict anybody from that. That's the kind of community that I wanted to build. Because I've been a part of a couple of chat rooms that were just torture. They wanted the moderators to run it like Attila the Hun and, yell at everybody and, shut up. And that's not my style. And quite frankly, I think that, unless you're in there pumping penny stocks and stuff like that, which luckily we don't have people doing, yet now everybody's going to come in and try to do it, right? But no, seriously, unless you're doing something like that that's looking to hurt people, your information is valuable and your questions are probably on the minds of other people. So if you ask the questions, it's really going to help other people out in the chat room. So in my opinion, it is now one of the best chat rooms out there, and it's definitely going to be the best chat room on the internet once we are hitting on all cylinders. And again, early adopters will be able to get in for $67 a month, and we're going to be launching that for, I believe, how much was the price? $4.97 for the newsletter, and it's going to be, I believe, $9.97 for the newsletter and the chat room per year. So obviously, if you lock in your rate doesn't go up as long as you stay a continuitized member. I guess that's what it's called. In other words, you continue your membership. So there's no contracts or anything like that. And in my opinion, it's a fantastic value. So that's number one. Number two, just to let everybody know, we are planning a live event for the middle of July in Chicago. And I am working on the details of that this weekend. That's why I'm doing this video at 1:43 in the morning. So there'll be a lot more information on that. You'll see me talk about it on the video. You'll see me talk about it in the newsletter. You'll see me talking about it through my daily email. And when you hear about it and hear the details and the speakers, you're going to see that this is going to be an event that you are really going to make sure to attend, because the wealth of information that's going to be offered at this seminar is second to none, and you're never going to be able to get an opportunity like this, at least for the rest of the year. So I will let everybody know about that, but save the dates. It is the middle of July in beautiful Chicago. All right, let's take a look at the market. Sorry about the 5.5 minute commercial, but I wanted to just give a heads up on those two things. So last week we've been watching for several months for the S&P to hit new all-time high. It finally did, and kind of whizzed through it. Right? We came up to the high up here, and then we kept going through. Friday we got some follow through, and then on Thursday, apologies, that was Wednesday. Thursday we got follow through, and then Friday we traded down early, but we recovered. Still closed red, but not that big of a deal. So you guys have heard me talk about that I do not believe that we would get a significant pullback until the all-time highs on the S&P had been reached. Well, now I am changing my tune. All right, the S&P 500 has tested those highs. I didn't say we're going to get them and then we're going to get a pullback. I said at the least. Well, now I have another index to focus on, and that's the Qs. Now, no, I don't think the NASDAQ is going to get to the all-time highs. Okay, before I don't think it's gonna get back there, but I do believe that the Qs can get to the 2012 highs, and I think they will get there before we see a significant pullback in the market. Again, I am not saying that once we hit the 2012 highs in the NASDAQ, we will see a significant pullback. That's not what I'm saying. I'm saying that is a minimal level to watch for. Now, there are a couple of things that are bothering me about the market, and I go over them in the newsletter. But first is the IWM, which is the Russell, which had been leading and is now lagging, as well as the transports. Okay? I mean, they're not crushed technically, but they're definitely not acting as strong as they were. They were the leaders. So those are two red flags to watch out for. But for the time being, I'm going to be viewing pullbacks as buying opportunities. Of course, with confirmation, it's not just, oh, we're down, let's buy. Although that's what a lot of people think, that's how easy the market is. It's not. But I am going to be watching for pullbacks. I am going to be watching for weakness, for potential buying opportunities still, at least until the NASDAQ hits that 2012 high. Is it a lock? Is it a guarantee? Of course not. Okay, even the S&P 500 hitting the all-time highs was not a lock or a guarantee. It's great in hindsight, and you guys know I've been saying it for a while, but I was still saying it doesn't have to listen to me. Okay, and the same thing with the NASDAQ. All right, I tried getting the market to listen to me. Doesn't mean I can't even get my kids to listen to me. The market sure as heck isn't going to do what I say. But anyway, that's what I'm thinking the next level is. Now, somebody asked me today, get the New York out of my mouth, what I thought of gold. And to me, this is the start of an impulse, in my opinion. I still believe that gold can see a further pullback here. Now, we're coming into support right down here at about 139.50. So that's, let me get that number pretty better exact. I don't know what that word means. All right, hold on. Let's get the weekly chart. And then we can, and this is GLD. I can look at the GC, but I'd rather just look at GLD. Okay, so this high is, 139.54. That high is, yes, that's the highest one. So 139.50 area. So, you got another 4 points here, 4 and change until that support comes in. You also have the 200-day moving average on the weekly chart, which I don't give as much weight as I would if it was on the daily chart. But, this, in my opinion, is a sharp impulse. If you're an Elliott wave person, it could be the start of wave 3. I'm not really a big Elliott wave person. I'm kind of a seat in my pants. I don't think that it doesn't work. I think that it's still valuable. I just have never been able to get my hands around its neck. So, but I think that this is a pretty nice, like a little grenade, right? Boom, and there it goes. It's off to the races here. So I think there's more downside to be seen. We have the NEM $38 puts in the newsletter, and I've been looking for 33. Actually, you can see here 32.11 is the 78.6% retracement. I don't know why I was looking for 33 though. Let me see why I was looking for 33, or if I was just wacky. No, I don't know why I was looking for 33. I guess 32.11 was the real number. But anyway, I'm looking. I don't know if we're going to get there by expiration, but we had a out at a double on the puts. I mean, they were 95 cents. It's not expensive, but it's not like this. Like we took a flyer in the newsletter on these options on ELLI at 7 cents, and they went to 35 cents, and we got out half. So even if the rest of them expire worthless, it's still going to be a decent gainer. But on stuff like that, on the high risk trades, that's one thing. But this was a 95-cent option, which, we don't consider that a speculative trade. Okay, we consider that a 95. Anything. We don't really have a line in the sand, but if they're really really low priced, we'll say, hey, it's a speculative trade. But these were just a regular trade, so we're looking to get out of these at a double, but. I'm thinking that a double may be too soon, so I'm going to see what I'm going to do about the newsletter. It's just that after a move like this, like we saw on Friday in gold and in these stocks, that we could get a retracement up. We could consolidate for a week before we continue. So, I mean, I don't know if they're just going to throw everything out, just throw everything overboard and, try to just liquidate gold here, but it'll definitely be interesting to watch. And obviously, if Newmont could get down, it could be a really nice trade here. So, and we're already in this, so it's not I'm not hindsighting. We've been in it since the beginning of March, so we were wrong for a while. But actually, we were right for a little bit at first, and then we were wrong. And then, of course, the big move in gold now is making those profitable. Again, let's look at oil too. I'm going a little deeper on the video than I usually do, but oil to me is sloppy. Okay, you have the triangle right here. It looks like it broke down out of the triangle, but you gotta. I mean, it didn't. It's not like gold that broke down and had a real sharp impulse. You also have the 78.6% retracement right here that has to be watched. So if it gets through there, okay, then I think we're ready for a move here in oil down to the sub 30 level, down to this 127% external retracement here. So we'll see. For right now, you still got to give that 78.6% retracement a benefit of the doubt. I skipped silver, even though I talked about gold. And silver, I've been bearish on silver for a while. I think it looked like crap the whole time gold was trying to recover, but right now silver looks like it's joining the cause also. So anyway, that's my outlook for the week. Seeing if gold can continue down, seeing what oil wants to do, and in the equity indexes, watching for weakness for potential buying opportunities. More explanations on this can be found in the newsletter. So I made up for the 5.5 minute advertisements by giving you some extra content. Usually I'm keeping these videos short. That's it. Have a great trading week. You can feel free to contact me, tiny@stockmarkettrendsex.com. I'll talk to you via the video, the daily email, or the newsletter. And be safe with trading. It is option expiration week this week, so there may be some spots of volatility. Okay? Take care.